Money. Today, we're talking about freedom, financial freedom. Let's be honest, we all want it. It's about security, opportunity, and having the resources to live your best life. Today, we're exploring a fascinating path towards that freedom, one that blends ancient wisdom with modern-day investing. So many people think the stock market is just graphs and numbers, a game of chance. But what if I told you there's a deeper layer, a connection to universal principles that can guide your decisions? That's what we're about to uncover. And trust me, it's powerful stuff. We're going to be talking about the Kybalion, a book filled with ancient Hermetic principles, and how these principles, these universal truths, can actually be applied to the stock market. I'm talking about understanding the energy of the market, the rhythm of the trends, and the power of your own mind in this game. Get ready to see investing in a whole new light. This is about more than just money. It's about tapping into your own potential, your own power to create abundance. So, buckle up everybody, because we're about to embark on a journey to unlock the secrets of the stock market through the wisdom of the Kybalion. Let's get started. The Kybalion is a fascinating book. It was written back in 1908 by three anonymous authors, and they called themselves the Three Initiates. They claimed they were sharing the teachings of Hermes Trismegistus, think ancient Egypt, ancient wisdom. The book focuses on what are known as the 7 Hermetic principles, which are basically 7 fundamental truths about how the universe works. These principles cover everything from the power of our thoughts to the interconnectedness of all things. And while the Kybalion is mostly about spirituality and personal growth, what we're going to explore today is how these principles can actually be used to understand the stock market. I know it sounds surprising, right? But when you really think about it, the market is just a reflection of human behavior, and human behavior is governed by the same universal laws that the Kybalion describes. It's all connected. So, over the next few minutes, we're going to delve into each of these 7 principles and see how they relate to investing. Make sure to understand them all. We're going to talk about things like understanding market psychology, recognizing patterns, and even using your intuition to make better decisions. I know some of you might be thinking, what do ancient principles have to do with my portfolio? And that's a fair question. But here's the thing. The stock market can feel like a chaotic and unpredictable place. It's easy to get caught up in the ups and downs, the fear and greed. But what if there was a way to find some order in the chaos? What if there were timeless principles that could help you navigate the market with more confidence and clarity? That's what the Kybalion offers. It gives us a framework, a different way of looking at things that can help us make sense of it all. We're not talking about getting rich-quick schemes here. This is about developing a deeper understanding of the market and of yourself as an investor. It's about aligning your actions with universal principles that have stood the test of time. So if you're ready to expand your perspective and explore a new approach to investing, then come with me on this journey. Let's unlock the wisdom of the Kybalion and see how it can transform your relationship with the stock market. The first principle we're going to delve into is the principle of mentalism. The Kybalion tells us the all is mind, the universe is mental. What does that even mean, right? Well, it's about recognizing that everything in our world, everything we experience, starts with thought. Our thoughts create our reality. Think about that in the context of the stock market. The market isn't some abstract entity. It's driven by people, by millions of individual decisions made every single day. And what drives those decisions? You got it. Thoughts, beliefs, emotions, fear and greed, optimism and pessimism. These emotions drive market trends. Remember the dot-com bubble back in the late 90s? Everyone was so excited about the internet, so convinced it would change the world, that they poured money into tech stocks, driving prices sky high. It was pure collective belief, and it had a real impact. And then, just a few years later, we saw the opposite happen with the financial crisis of 2008. Fear gripped the market. People panicked, sold their stocks, and the market plummeted. It was a stark reminder that emotions, especially fear, can have a powerful ripple effect. What does this mean for you as an investor? It means understanding that the market is not just about numbers and charts. It's about psychology. It's about recognizing the power of collective belief and how it influences market trends. Think about it. If everyone believes a stock is going up, they'll buy it, and guess what? The price goes up. Remember GameStop? It becomes a self-fulfilling prophecy. The same goes for when people believe a stock is going down. It's the power of collective thought in action. Now, this doesn't mean you should just follow the crowd blindly. Remember, the crowd can be wrong, and often is, but it does mean paying attention to market sentiment, to what people are feeling and believing. It's about understanding the psychological forces at play. There are tools that can help you do this. Sentiment analysis, for example, looks at news articles, social media posts, even earnings call transcripts to gauge the overall mood of the market. Are people feeling optimistic or pessimistic, fearful or greedy? These insights can be incredibly valuable. The principle of correspondence, a principle that reminds us of the interconnectedness of everything. It's like that feeling you get when you realize that everything is connected, that there's a bigger picture we're all a part of. Think of it this way: the stock market doesn't exist in a bubble. It's a reflection of the world around us, of the hopes and dreams, the fears and anxieties of entire nations. When a country thrives, when its people prosper, its stock market often reflects that success. But when uncertainty casts a shadow, the market feels it too. It's all connected. Remember the Brexit vote back in 2016? The world watched as the UK decided to leave the European Union. And what happened? The market reacted. There were tremors of uncertainty, ripples of doubt that spread across the globe. It was a stark reminder that what happens on the grand stage of global events echoes in the financial markets. But here's the beauty of the principle of correspondence. It works both ways. Just as global trends influence the market, so too can individual companies send ripples outward. Think about the giants, the Apples and Amazons of the world. When they launch a groundbreaking product, it doesn't just boost their stock price, it often lifts the entire tech sector, inspiring a wave of innovation and investment. It's a beautiful dance between the micro and the macro, a constant interplay of influence and inspiration. How do we, as possible investors, navigate this intricate web of connections? How do we decipher the whispers of the market and make wise decisions? It begins with understanding the language of the economy. Just like we learn to read and write, we need to learn to read the signs of the market, to understand the stories they tell. We need to pay attention to the economic indicators, those vital signs of a nation's financial health. Think of things like GDP growth, the pulse of a nation's economy, or unemployment rates, a barometer of people's livelihoods. These indicators aren't just numbers on a screen. They're stories about people's lives, their jobs, their dreams, and they hold valuable clues to where the market might be heading. Then we have the Consumer Confidence Index, a measure of how optimistic people feel about the economy. Are people confident? Are they spending? These sentiments, these collective feelings, translate into market trends. It's like a giant energy field, and we're all contributing to it with our hopes, our fears, our decisions. By tuning into these macroeconomic factors, by understanding the stories they tell, we become more informed investors. We start to see the bigger picture, the interconnectedness of it all, and that is where true wisdom lies. Let's talk about energy, about the pulse of the market, the rhythm that drives it. The principle of vibration tells us that nothing rests, everything moves, everything vibrates. And nowhere is this more evident than in the stock market. It's a whirlwind of activity, a constant dance of ups and downs. Just think about it. Every second, every minute, every day, prices are fluctuating. Some stocks soar like eagles while others plummet like stones. It's enough to make your head spin. But within this seeming chaos lies a hidden order, a symphony of vibrations that we can learn to understand and even predict. You see, different stocks and sectors vibrate at different frequencies. Some are like the steady beat of a drum, think utilities or consumer staples, offering stability and consistent, though perhaps not explosive, returns. Then there are those that thrum with the energy of a rock concert, think tech or biotech, full of volatility, capable of skyrocketing growth, but also prone to sudden dips. The key to mastering the principle of vibration is learning to identify these frequencies, to understand the rhythm of each stock, each sector. It's about finding the tempo that resonates with your investment style and your risk tolerance. Are you someone who thrives on the adrenaline rush of high-growth, high-volatility stocks? Or do you prefer the steady, reliable performance of more conservative investments? Now, you might be wondering, how on earth do I learn to read these market vibrations? How do I find the rhythm? Well, that's where the beauty of technical analysis comes in. It's like learning a new language, the language of charts and patterns and indicators. Think of tools like moving averages, which smooth out price data to reveal long-term trends. It's like watching a ship navigate a choppy sea. The waves might be rough, but the ship holds its course. Then there's the Relative Strength Index, or RSI, which measures the speed and change of price movements. It's like a speedometer for stocks, telling you whether a stock is overbought or oversold. And let's not forget about Bollinger Bands, which create a dynamic range around a stock's price, helping you visualize volatility and potential breakouts. It's like having guardrails on a winding mountain road, giving you a sense of boundaries and potential turning points. These tools are your instruments, your guides to navigating the complex world of market vibrations. By learning to use them, by studying the patterns and signals they reveal, you gain a deeper understanding of the market's rhythms. You start to see the ebb and flow, the natural cycles that govern price movements. Now, let's talk about balance, about the ebb and flow, the natural duality that exists in all things. The principle of polarity tells us that everything has two sides, two poles, two opposite but interconnected forces. It's the yin and yang, the light and shadow, the constant interplay of opposites that creates the beautiful tapestry of life. And nowhere is this principle more evident than in the stock market. We see it in the rise and fall of prices, in the ebb and flow of investor sentiment. It's a constant dance between bull and bear markets, between periods of exuberant growth and moments of cautious retreat. Think about it. When the market is on an upswing, when optimism reigns and investors are pouring in, it feels like the good times will never end, doesn't it? But just like the sun eventually sets, even the most robust bull market will eventually give way to a period of correction, a bear market where prices decline and investors become more risk-averse. But here's the key. Both bull and bear markets are natural, necessary parts of the cycle. Just like we need both day and night, both sunshine and rain, the market needs both expansion and contraction to thrive. It's about finding the balance, the equilibrium that allows for sustainable growth. So, how do we navigate these market extremes? How do we find opportunity in both bull and bear markets? It starts with understanding that each phase presents unique challenges and rewards. Bull markets, with their upward momentum and infectious optimism, can be tempting times to jump in with both feet. But it's also crucial to remember that what goes up must eventually come down. That's why it's essential to have a strategy, to know your risk tolerance, and to avoid getting swept up in the hype. It's about making informed decisions based on sound principles, not on emotion or speculation. Then there are bear markets, those periods of decline and uncertainty. It's easy to get caught up in the fear, to panic and sell everything. But seasoned investors know that bear markets are often the best time to buy, to find undervalued assets and position themselves for the eventual rebound. It's about having the courage to go against the grain, to see opportunity where others see only risk. Remember, the stock market is a marathon, not a sprint. It's about pacing yourself, staying the course, and making wise decisions based on sound principles, not on fleeting emotions. The principle of rhythm, it's about understanding that the market, just like life, has its own natural ebb and flow. You see those waves crashing on the shore, coming and going? That's rhythm. Now, in the market, those waves, those are your economic cycles, your business cycles, even those little seasonal trends. Remember when you were a kid, and every summer, the ice cream man would make his rounds? That's a seasonal trend. And just like that, Ice Cream Man knew when to show up. Investors, they got to know when to buy and when to sell. Because if you understand these rhythms, you can ride those waves. You can time your investments just right. That's what it's all about, getting in sync with the market's natural rhythm. It's like dancing, you see. You wouldn't start waltzing to a salsa beat, would you? You got to move with the music. I know what you're thinking. This sounds complicated. But listen, it's all about recognizing patterns. Just like that old saying, history repeats itself. Think about retail stocks, for example. Don't they always seem to do well around the holidays? Everybody's buying presents, spreading holiday cheer. It's a predictable rhythm. And then you got your agricultural stocks. They got to follow the seasons, right? Planting time, harvest time. It's all a cycle, a beautiful dance with Mother Nature. And when you start seeing these patterns, when you start understanding these rhythms, you can make them work for you. You can ride those waves of prosperity all the way to the bank. The principle of cause and effect. Now, this one's all about understanding that in the stock market, just like in life, things don't just happen out of the blue. Every action has a reaction. Every cause has its effect. You drop a pebble in a pond, you're going to see ripples, right? Same thing in the market. Now, those pebbles, those are your economic indicators, your company earnings reports, even those big political events. They all create ripples. They all cause the market to react. And when you understand those causes, you can start predicting the effects. You can see those ripples coming before they hit you, and that's how you stay ahead of the game. Now, I know what you're thinking. You're asking me to predict the future. Well, not exactly. But listen, we can learn to read the signs. We can learn to anticipate those market movements. Let's say the Federal Reserve decides to raise interest rates. Now, that's a big pebble, right? And what happens? Borrowing costs go up, companies feel the pinch, and stock prices, they might start to fall. But see, if you're paying attention, if you're analyzing those causes, you can be ready for that effect. You can adjust your strategy, protect your investments, even find opportunities in the midst of the chaos. That's the power of this principle. It's about moving from reaction to anticipation, from being tossed around by the waves to riding them with confidence and grace. Now let's talk about the principle of gender. Don't let the word fool you. This isn't about men or women. The Kybalion teaches us that everything has both masculine and feminine energies, and the stock market is no exception. Think of it as the balance between action and patience, risk and caution. On one hand, we have the masculine energy of aggressive investing. This is about going after those high-risk, high-reward opportunities, like investing in a brand new startup that could be the next big thing. It's exciting, it's dynamic, but it's not for the faint of heart. Then we have the feminine energy of conservative investing. This is about slow, steady growth, like investing in established companies that pay dividends or bonds that offer more stability. It might not be as glamorous, but it's a marathon, not a sprint, and it can lead to incredible long-term growth. The key here is balance. Just like in life, you need both energies to thrive in the stock market. You need the boldness to take calculated risks and the wisdom to protect your assets. It's about finding that sweet spot that aligns with your personal risk tolerance and financial goals. Now, some of you might be thinking, I'm just not a risk taker, and that's okay. You don't have to be a Wall Street maverick to be successful in the stock market. There are so many different investment strategies out there, and the beauty is, you can find one that aligns with your personality and your comfort level. Maybe you're just starting out and you have time on your side. You might feel comfortable being a little more aggressive, investing in growth stocks with high potential. Or maybe you're closer to retirement and you're looking for stability and steady income. In that case, a more conservative approach, focusing on bonds and dividend-paying stocks, might be a better fit. The important thing is to understand your own risk tolerance and invest accordingly. Don't let anyone tell you there's only one right way to do it. Remember, you have the power to create a financial portfolio that reflects your unique needs and goals. So how do you find that balance? It's about diversifying your portfolio. Don't put all your eggs in one basket, as the saying goes. Spread your investments across different asset classes, industries, and even geographical locations. That way, even if one area of the market is down, you're protected. But of course, I am not a financial advisor. We've covered so much ground today, from the power of our thoughts to the rhythms of the market. And I hope you're starting to see how these ancient Hermetic principles can be applied to something as practical as financial trading. You see, the Kybalion isn't just some esoteric text gathering dust on a shelf. It's a source of timeless wisdom that can empower us to navigate the complexities of life, including the often intimidating world of the stock market. By integrating these principles into your investment strategy, you're going beyond the numbers, beyond the charts and graphs, and tapping into a deeper understanding of market dynamics. It's about recognizing the interconnectedness of everything, the ebb and flow of energy, and the power of our own minds to shape our financial destinies. Remember, knowledge is power, and when you approach the stock market with a holistic perspective, you're empowering yourself to make informed decisions, manage risks effectively, and ultimately achieve your financial goals, and with it, freedom. I know that some of you might be thinking, this all sounds great, but I'm just not sure where to start. And that's okay. The beauty of this journey is that it's a process and there are resources available to help you every step of the way. Start by educating yourself. There are countless books, articles, and online courses available that can deepen your understanding of both the Kybalion and the principles of investing. Don't be afraid to seek guidance from financial advisors or mentors who resonate with your values and investment philosophy. Remember, you don't have to do this alone. And most importantly, trust your intuition as you delve deeper into these principles and apply them to your own financial journey. You'll develop a stronger sense of what feels right for you. You'll learn to trust your gut, make decisions with clarity and confidence, and navigate the stock market with a sense of purpose and empowerment. So, as we wrap up our exploration of the Kybalion and its relevance to the stock market, I want to leave you with this. This is a journey, and like any journey worth taking, it's filled with ups and downs, twists and turns. There will be times when the market feels exhilarating, and times when it feels daunting. But remember, you are not alone. Armed with the timeless wisdom of the Kybalion and a commitment to continuous learning, you have the power to navigate the complexities of the stock market and create a brighter financial future for yourself. Create your own freedom.